Hi everyone, welcome to RHB Bank's podcast series. Today I'll be sharing with everyone what is in stock for fund discovery ideas in the quarter 1 of year 2022. To kick off, let's take a look at the industry fund flow in the last quarter of year 2021. In the Q4 year 2021, appear to show material inflow into bond fund, which potentially due to the end of tax incentive for the money market fund. However, you notice that outflow in the money market fund is far more than the inflow into bond fund. Worth to note that most of the investors in the money market funds are the corporate investors. Overall, investors continue to be optimistic on the global equity, including the technology sector, where there are increase in the inflow into global equity and IT-related equity fund. Investors who took profit from the tech sector in the quarter 3 year 2021 may have reinvested into tech sector in the Q4, hoping to re-enter at the lower entry price. Despite there is still inflow in China-related equity fund, however, inflow has gradually subsided comparing to the inflow which was shown in the previous quarter. This is potentially due to investors maintaining a look-and-see stance before putting in more into Chinese equity funds. Back to our home country, Malaysia, investors are not too convinced on the prospect for the Malaysia equity market. This is shown from the outflow in the Malaysia-related funds in the quarter 4 of year 2021, despite inflow in the previous quarter. Overall, there is a net outflow from the Malaysia equity funds on the second half of year 2021. It is not difficult to understand why investors prefer global equity fund, including US broad market, the S&P 500 and the Nasdaq market. Both markets were up by more than 10% in the last quarter of year 2021. Comparing Hang Seng China Enterprise Index, HSCI as the offshore China index continued its downtrend, lowering by another 5.6% in the last quarter of year 2021. From its peak in the February year 2021, HSCI has gave up more than 30% in total, making it one of the worst performing market in year 2021. While Malaysia equity market is relatively flat in Q4 year 2021 with some marginal upside. For year 2022, RHB continued to maintain its overweight view in equity and alternative assets, and neutral on fixed income and underweight in cash. Example of alternative assets includes REITs. A few key risks we need to watch out for includes Fed monetary policy, supply chain disruption, China market risk, and the potential of a new COVID-19 variant. Within the equity market, we prefer developed market versus emerging market. Any dip in global equity market is a good opportunity to buy. We expect more synchronized recovery in the global equity market this year with more stabilization in China. There is potential for moderate growth recovery path from mid-2022 onwards. We continue to expect moderate monetary policy by Fed Reserve in the year 2022. Monetary policy may be less accommodative but doesn't mean it's restrictive. Historically has shown that market may show weakness in the first rate hike. However, thereafter, market will quickly recover 3 months after the first hike. That will be a good opportunity for investors to buy at dip. Emerging market assets are generally flat in the last quarter of 2021, with marginal movement during that time period. Only global mixed asset funds such as the RHB Global Sharia Dynamic Income Fund had done well in the last quarter, riding on the outperformance of the US-related equity market. However, we continue to believe that mixed asset and fixed income funds should be inclusive in clients' portfolio in order to cushion volatility in the investor's portfolio. Comparing to a pure equity fund, mixed asset funds are more defensive in the down market. Besides fixed income or mixed asset fund, investors may consider REITs as part of the cushioning in clients' investment portfolio. REITs offer both benefit of capital gain and income payment to investors. As most people gradually moving towards the live with COVID-19 lifestyle, office workers are gradually going back to office. Hence, demand for offices will gradually recover. Reopening in more retail activities has spurred rental income for retail REITs, while logistic REITs continue to play important role to support continued online spending, which are both motivated by recovery in income earning and revenge spending behavior. REITs are also considered as an inflation-linked assets, where rentals are tied to consumer prices and inflation indices. Manulife Sharia Global REITs has done well in the past 2 years, riding along with the outperformance of developed equity market, which the fund is up by 34.41% as of 31st December 2021. While Manulife Investment Asia Pac REITs has somewhat lagged, which also reflects slower vaccination in emerging market versus the lack of the developed market. The fund is slightly down by 1.16% in the same time period. However, this offers opportunity for potential capital gain and relatively attractive entry point for investors. Principal Global Millennial Fund is a global equity fund which invests into companies that benefit from the spending behavior of millennial lifestyle. This is in line with the consumerism recovery story post-COVID-19 and sustainable spending behavior which are instilled in the past 2 years during the COVID-19 pandemic. For example, online shopping, video streaming, social media, and healthy lifestyle. The fund is up by 17.62% in the past 1 year. TA Asia Absolute Alpha invests into funds that derive its income or benefit from the economic recovery in Asia, which means its investment mandate allows the fund to invest into stocks listed globally, which benefit from Asian recovery story. For example, as of 31st December 2021, the fund's main exposure are in Asian equities, but also diversified its holding to US and European related equities. This is an absolute return fund, and for the past 1 year, the fund has garnered 10.01% return. My final sharing is on socially responsible investing themes. RHB established the RHB Sustainability Framework in 2019, which outlines and embeds sustainable practices into its business and operations in line with its sustainability vision of building sustainable future. RHB Asset Management launched RHB Climate Change Solution Fund in January 2022, which is a feeder fund feeding into JP Morgan Climate Change Solutions Fund. RHB Climate Change Solutions Fund gives you the opportunity to invest in forward-thinking companies that develop and scale solutions to address drivers of climate change. This fund is suitable for investors looking to get long-term capital gains and are willing to take the risk of investing in developing technologies. 5 key climate change solutions includes sustainable construction, sustainable food and water, renewables and electrification, recycling and reuse, and sustainable transport. This fund is a good inclusion in clients' portfolio as part of complementing the client's global equity fund space. Similar to ESG fund, Sharia investing also adhere to principle of socially responsible investing. Despite challenging investment environment in the Chinese equity market in year 2021, RHB Sharia China Focus Fund gained 12.64% in 2021, outperforming the broad China onshore index, which was actually down by 3.76% in the same time frame. We have seen some stability in the Chinese equity market in the first month of 2022. We continue to suggest investors continue diversifying their investment to include investment into emerging markets such as Chinese equity market.